Hey everyone, welcome back to the channel. Today, we're diving deep into the past to uncover how a tiny, waterlogged country in Europe laid the groundwork for the entire global economy we know today. That's right, we're talking about the Netherlands and its golden age. It's a story of windmills, wooden shoes, and modern capitalism? You bet. Picture this. It's the 1600s. While most of Europe is tangled up in royal drama and religious wars, the Dutch are busy building a global trading empire. They weren't just sailors and merchants. They were financial innovators. They created systems and ideas that are still the bedrock of Wall Street, the London Stock Exchange, and every other financial hub on the planet. So, how did they do it? It all started with a simple problem: risk. Ocean voyages were incredibly risky. A ship could sink, pirates could attack, or you could sail halfway around the world and find no one wanted to buy your stuff. To fund these expensive, high-stakes journeys, no single person wanted to foot the entire bill. So the Dutch came up with a brilliant idea: the joint stock company. Instead of one rich merchant funding a whole voyage, they sold shares or small pieces of the company to hundreds or even thousands of investors. This is how the legendary Dutch East India Company, or the VOC, was born in 1602. Think about it. This was revolutionary. For the first time, regular people, shopkeepers, artisans, anyone with a bit of extra cash could invest in international trade and get a piece of the profits. If the voyage was successful, everyone got a dividend. If the ship sank, each investor only lost their small initial investment. This spread the risk and pooled an enormous amount of capital. Sound familiar? It should. This is the exact same model that companies like Apple, Google, and Amazon use today. They issue stocks, and we buy them, hoping the company does well. The first publicly traded company wasn't a tech giant in Silicon Valley. It was a spice trading company in Amsterdam over 400 years ago. But where do you trade these shares? You can't just go door to door. The Dutch had a solution for that too. The Amsterdam Stock Exchange, established in the early 1600s, it was the first institution of its kind in the world. It wasn't a grand building at first, just a courtyard, and later a dedicated building where merchants and investors met daily to buy and sell shares in the VOC and other ventures. This created something entirely new, a secondary market. You didn't have to wait for a ship to return from Asia to get your money back. If you needed cash, you could just sell your share to another investor on the exchange. The price of that share would fluctuate based on supply and demand, news about the fleet, rumors of war, or the price of pepper in Indonesia. This constant buying and selling of paper assets, disconnected from the physical goods, was the birth of modern stock trading. They even invented complex financial instruments like futures and options, allowing people to bet on the future price of a stock. It was a sophisticated system, and it made Amsterdam the financial center of the world. Of course, with great financial innovation comes great financial madness. And there's no better example than the infamous Tulip Mania. In the 1630s, tulips, which were exotic flowers recently imported from the Ottoman Empire, became a massive status symbol. Everyone had to have them, especially the rare broken bulbs with vibrant, flame-like patterns. Prices for these bulbs skyrocketed. People started treating tulip bulbs not as flowers to be planted, but as financial assets to be traded. They sold their homes, their land, and their life savings to buy a single bulb, hoping to sell it for a higher price later. At its peak, a single Semper Augustus bulb could be traded for a grand Amsterdam canal house. It was a classic speculative bubble, and like all bubbles, it burst. In February 1637, for reasons no one is entirely sure of, the market suddenly collapsed. Prices plummeted. Buyers disappeared. People who had taken out huge loans to buy bulbs were left with worthless flowers and mountains of debt. Fortunes were wiped out overnight. While Tulip Mania is often seen as a cautionary tale of irrational greed, it's also a powerful demonstration of the new financial mindset the Dutch had created. The idea that you could get rich quick by trading an asset whose value is based purely on speculation is a theme we see repeated throughout history. From the dot-com bubble of the 90s to the crypto crazes of today, the Dutch didn't just invent the stock market. They also gave us our first taste of a market crash. But trade and stocks are only part of the story. To make all this work, you need a reliable banking system. Before the 17th century, banking was a messy affair. Currencies were all over the place. Coins could be debased or clipped, and transferring large sums of money was a dangerous and complicated process. Enter the Bank of Amsterdam, founded in 1609. This wasn't a bank in the modern sense that it gave out loans to start businesses. It was a public exchange bank, backed by the city of Amsterdam itself. Its primary function was to make payments reliable and efficient. Merchants could deposit all their various gold and silver coins from different countries, and the bank would credit them with a standardized, universally trusted currency called bank florins. You could then use these bank florins to pay other merchants, simply by having the bank transfer the amount from your account to theirs. It was a system of paperless transactions, a 17th century version of Venmo or PayPal. This made trade incredibly secure and efficient. You no longer had to lug chests of gold across the city. This stability and reliability were crucial. It built trust, which is the absolute cornerstone of any financial system. The idea of a central institution guaranteeing the value of money and facilitating payments laid the groundwork for modern central banking, like the Federal Reserve in the U.S. So, let's connect the dots. The Dutch created the publicly traded corporation, allowing for massive capital accumulation. They built the first stock exchange, creating a liquid market for those shares and introducing speculation. They weathered the first speculative bubble with Tulip Mania, a lesson we are still learning today. And they established a central bank that provided the stability and trust needed for the entire system to function. These concepts: limited liability, stock trading, financial derivatives, speculative bubbles, and central banking, are not just historical footnotes. They are the operating system of our global economy. When you check your 401k, buy a share of stock on your phone, or read about the Federal Reserve adjusting interest rates, you are participating in a system whose DNA was written in the canals and trading houses of 17th century Amsterdam. The Dutch Golden Age may be long over, but its financial legacy is all around us. They didn't just build a trading empire. They built the blueprint for modern capitalism. It is a powerful reminder that the ideas that shape our world often have surprisingly deep roots in history. Thanks so much for watching. What other historical economic stories would you like to see? Let me know in the comments below. And if you enjoyed this journey back in time, don't forget to like, subscribe, and hit that bell icon so you don't miss our next video. See you next time.